patriotic are you? According to some politicians, it's patriotic to pay taxes. And the more taxes you pay, the more patriotic you must be. That makes a lot of sense. Just in case you didn't feel like waving the old glory on tax day this week, don't worry, Congress has come to the rescue to help ensure your patriotism. Thomas will explain the history and mechanics of that scheme that can make you a very proud American. Welcome or not fully rested. Thomas Blake, as he delves deeply into the bowels of alternative minimum tax.
This is going to be exciting. Just preface it with that. I once had a client who came in. We looked over all of her tax documents, looked at last year, this year, so on and so forth. And she said, now Thomas, as she was leaving, make sure that I pay the minimum tax. I said, Lucy, whoever, you don't want to pay the minimum tax. Now she had an innocent request. She wanted to pay the least tax possible in a legal way, of course. And I had an informed response. Oh no, you don't want to pay the alternative minimum tax. Let's start off by saying our Congress, they love us. I would dare to call them benevolent dictators. In the tax code, which is exciting, they give us lots and lots of goodies. Matter of fact, when I hear the word qualified, I get aroused. Qualified means something really, really good. It means a lower tax rate on dividends, or stay awake, Reed, on dividends and long-term capital gains. It can mean deferrals or exemptions. It can mean like lots of nice, juicy tax credits. Qualified is a good thing. But alas, it came to pass that perhaps Congress had too many goodies. They were too generous of dictators. So now let's have a little history lesson. How did this come about? There was a study done of 1967 tax returns. That was quite a long time ago. 1967. And it was found that there were 155 individual taxpayers who made more than $200,000 who legally paid no income taxes.
Wow.
Okay, now, $200,000 is still a pretty good salary, but inflation adjusted, that would be like $1.2 million today. So in 1967, there were 155 individuals that legally, basically in today's terms, made over $1 million and legally paid no income taxes. Well, of course, everyone was appalled. This was awful. Those evil rich people were not paying taxes. And they were evil rich people, and they weren't paying any taxes. They weren't doing their fair share, I think would be the terminology we use today. Okay? President Johnson, of course, heard this news and knew of the great unfairness of it. So what did he do? He did what most every politician does. He kicked the can down the road. He said, well, you know, I'm not going to run for re-election. I refuse to accept my party's nomination, if you ever heard that speech. I'm not going to run for re-election. So he kicked the can down the road to President Nixon, a good Republican. So in 1969, Congress passed what's called the Alternative Minimum Tax. Now, they also gave a very generous, stay with me, a very generous exemption of $40,000 so that the middle class wouldn't be hit by this alternative minimum tax, the AMT. And developed basically a parallel tax system. So you did your taxes the old-fashioned way with all those goodies, and then you did your tax with the AMT and you took away those goodies. Okay, now, Gary's going to assist me. He is going to read one paragraph from the Master Tax Guide about the AMT. Please rise and tell us about the AMT.
I'll come up front. It'll be a little bit easier.
Come on down. Don't be mortified. pay the AMT, then you're mortified.
For non-corporate taxpayers, tentative minimum tax is equal to 26% of the first $175,000, $87,500 for married individuals filing separately of alternative minimum taxable income, plus 28% of any AMT in excess of the threshold. For corporations, tentative minimum tax is 20% of AMT, but certain small corporations and corporations in their first year of existence are exempt. A taxpayer's AMT is the regular taxable income increased by AMT preferences and modified by AMT adjustments. A certain amount of AMT is exempt from
Okay, that's
tax.
enough. Now, Gary has an accounting degree. I wanted to get a non-accountant person to read that,
That
but
was
I was
horrible.
told not to do that. So what I want to do today is, this is a rather technical topic, and you guys are rather non-technical people. How many people actually did your tax return? I still need to do mine. I'll do that by October 15th. But really, in the class I teach, this is how we talk about the alternative minimum tax, okay? So I'm not sure if you can see it, but at the very top, you can't see it. At the very top, it says regular taxable income. Well, that's taxable in goodies. That's from our benevolent dictators who were way too benevolent, as they found out in 1967 and passed the law in 1968. What we're doing is, with this regular taxable income, which is way too low for these very evil rich people, we're pumping it up. We are adding some things called preferences, and we're adjusting for things called adjustments. Now, what kind of things are those? I just love the response. You can see what I see. Yawns, yes.
Yachts.
Yeah, okay. But some of the goodies they take away as adjustments and preferences are your standard deduction. We know what that is, right? We just did our taxes.
Right, yes,
They
absolutely.
take away your personal exemptions. Oh, it's just gone. Absolutely. If you are in a state where you pay lots of state and local taxes, or your property taxes in Florida, they take those away. If you itemize, add them back. If you're in California or New York, you're really in trouble, because you've deducted a lot of state, well, you're from New York. You pay a lot in state and local taxes, and it's gonna bump up the AMTI base. If you have a second mortgage on your house, for your normal taxes, you deduct the interest. But for the AMT, you add it back unless, you gotta love all these exceptions, you just read a few, unless it was used to build, improve, or purchase your house. So there's an exception there that's rather strange. And also, you have to add back all what's called your miscellaneous itemized deductions. I've lost those people. And those are things, for example, employee business expenses. Let's say you're a salesperson and you have to take people out and travel and you don't get reimbursed for it. For normal taxes, Congress is very nice, very generous, they let you deduct it. But then they say, oh no, you gotta add it back for this purpose. So basically what they're doing, they're taking that way too low taxable income and bumping it up, and we're calling it alternative minimum taxable income. Now, here's the trick, because there's always a trick, of course. For your normal taxable income, the maximum rate is 35%. But, as Gary says, I'm sure you all comprehended as he was reading it.
Oh, yes.
Absolutely. The maximum rate for the AMTI is a mere 28%. Does that make sense? So what we do is, regular taxable income could be 35%, but this higher AMTI, alternative minimum taxable income, is only a mere 28%. That's a 7% difference. So what we're doing, we get to that number right here, and then we subtract an exemption, which was $40,000 forever, never indexed for inflation, since 1969.
Oh.
That was the problem, and that's why they've had the AMT patch for so many years. Okay? That gets to a number, then we compute based on 26 or 28%, and then we compare that to your regular tax. And if your alternative minimum tax is greater than your regular tax, then you pay the alternative minimum tax in addition to the regular tax.
No. Oh, gosh.
That's what I'm saying. So that is the scheme that we call the alternative minimum tax. Now, I do have some good news.
No, you can't.
I do have some good news. All you've heard is bad news, right?
Right.
Well, except for the fact that you are patriotic and you pay a lot of taxes. That's good news. Make the flag on that one. Here is the good news. The good news is that exemption of $40,000, which has been around forever. You know, I don't have much to say about our president, but I'll be darned, President and Congress, as part of the fiscal cliff legislation, permanently increased the exemption. It was $40,000 for years and years, it had 2-year patches, and it's now $78,750. Write that down, it's important. $78,750, and it's indexed for inflation. So we're not gonna have to have these crazy 2-year fixes anymore.
Wow.
Without the patch, what started as 155 people would have affected 32 million people.
Whoa.
And now will affect 4 million people. So that's the good news, lots of bad news, a little bit of good news. I hope you now understand the AMT this week of April 15th. Thank you very much.